Hello there and welcome to a tutorial video on the auction bars. This is a tool that can help you identify high probability reversal patterns. We're all familiar with the expression that the trend is your friend, but as most of you know, there are extended periods of time when markets are non-trending, and therefore it really makes sense to keep track of reversal patterns that plot at the current range, high and low points. And to do this, we want to keep track of two things: the current trading range, as well as established reversal patterns. So the auction bars can do both of those things. They can keep track of the current trading range and high probability reversal patterns. So we'll talk about the reversal patterns first. They're based on extensive testing of candlestick patterns. We always found those a little esoteric and hard to learn. So what we've done is to simplify a few of them that works really well, basically boiling it all down to two price action patterns, namely reversal and spike bars. As for spike bars, there is a old saying, Japanese proverb, that says that a spike that sticks out is very likely to get hit by a hammer. And talking about spike bars, that really speaks to the fact that they're very easy to identify on the charts, and therefore a lot of traders will act on them. Basically, what a spike bar tells us is that prices were rejected at a certain level and that the market pushed back to where the candle opened. So what we're looking at here is a geometric makeup of one particular bar where the upper or lower shadow compared to the body of the bar is considerably larger. So for bearish spikes, we want the upper shadow to be a lot bigger than the candle body, and the lower shadow in the indicator box of the auction bars, you can define exactly how large it should be. We'll talk about that in a little bit. And for bullish spike bars, we want the lower shadow to be a lot bigger than the candle body and the upper shadow. So here we see a bullish spike form at the lower edge of a higher time frame range. That's what these horizontal lines are here. This is a lower, and this is the upper range of a secondary bar series. The primary bar series here is a 5-minute chart of the crude oil contract, and the higher time frame range is created using a 60-minute time series. So that is what we call the auction range. Again, the idea is that the market is ranging some 80% of the time, so we're looking for reversal patterns around these higher time frame ranges. And once this range is broken, we see it's broken up here, we have a close outside the range. This is what we call an auction bar. And we see a new auction range is plotting based on this breakout. And up here towards the upper edge of the new auction range, we see a bearish spike plot. And again, what we're looking for here is the geometric makeup of the bar. So in this case, we want the upper shadow to be a lot bigger than the candle body and the lower shadow. There's not much of a body here, but I think you get the gist of the price rejection that we're seeing here towards the upper part of the range. There's a lot more going on in the background here than just defining the higher time frame ranges and the high, low, and the close of the primary bar series. For example, we also look at the significance of the range and volume as compared to the previous bars in the reference period. So it should be for the spike bar above average to avoid these noise signals that happen in low volatility and low volume scenarios. You want the volume and the range to be significant, so average or above average. And then we can define specifically the size of the shadow size, and that is important to exactly define what type of price rejection it is that you're looking for. And finally, we have here also a way to define the swing strength. That is a zigzag filter in the background here, marking the higher highs and the lower lows of the spike bar. So a spike bar needs to be mark a new low of the last 5 bars is what we've set this to. And then we have a rejection of this price level here and shooting back up into the range here. So these couple of settings here is what will allow you to customize signals according to your own risk tolerance level. As you see here, I have a pretty conservative requirement for the shadow size here, set to 70%. And yeah, I found this to be more reliable as the price rejection is more defined. All right, so we're going to have a look at the reversal bars now. As with spikes, reversal bars also show us price rejection at a certain level. But they're more difficult to spot on the chart. We've seen how easy to identify these spike bars are very easy to spot on the chart. But for reversal bars, we're comparing 2 bars, obviously, and they're not as visually obvious on the chart. So let's have a look at exactly what we're talking about here. We have 3 definitions of the reversal pattern, A, B, and C, and basically they are increasingly restrictive in that order. So reversal A is the most liberal reversal pattern. We have a higher high and a lower close. So the previous close was here, current close is here, and the high was marked up here, rejected by this close. Reversal B is a outside bar. So it's a bar with a lower low than compared to the previous one. And it also has a higher high than compared to the previous one. So that's an outside bar. And again, it has a lower close when compared to the previous one. And then the most restrictive reversal pattern is reversal C. Again, it's an outside bar, but this time we see a close which is below the low of the previous bar. All right, so back into the chart here. 5 minutes of the crude contract, again with a 60-minute range as the auction range. We have a higher high plot up here and a lower close than the previous bar, right at the upper edge of the current trading range, the auction range. And then we see the price here drifting towards the lower edge, making a retest of this level. And then we have a breakout towards the downside. It's an outside close from this range. And from now on, we have a new auction range plotting, painting horizontal lines of the last 60 minutes. And then there is a new breakout here, again to the downside. And finally, we do find a lower low with a higher close at this new auction range low, marking a reversal up pattern. And as with the spike bars here, we can define specific properties of the reversal bars by looking at the significance of the range and volume of the reversal bar as compared to the reference period. And we also have the swing strength, the zigzag filter in the background here, keeping track of the higher highs and the lower lows of the X previous bars. And most importantly, we can look at exactly where these reversal bars are to plot. So here we see a reversal up at the lower part of the range. And here we have a reversal down at the upper part of the range. We can also set to see reversal pattern at the mid-range. This would probably be one right here. And you can also set these reversal patterns to occur only at the outside of the range. So this looks to be a reversal up here, and it's outside the range. So no, it's not a reversal up because it's not closing above the previous close, but it's one of these spikes that just kind of sticks out on the chart. Very easy to identify. Let's look at how to set the entry signals here, and then we'll go into a live chart here to see some more recent examples. Afterwards, let's just go get the trade entries out of the way. So for a bearish reversal pattern, it is confirmed once the price moves below the low of the setup bar. So we have a lower low take out the low of the setup bar in order to open a position. So the confirmation does not have to occur directly on the next bar. As we see here, you can set the trigger also to occur within a specific time window. For example, the low has to be taken out within the next 3 bars from when the reversal bar plotted. So if this didn't take out the low right on the next bar, we could wait for another 3 bars in order for this low to be taken out. And then once a signal is triggered, the stop loss here is set just above the high of the setup bar, or you can also align it with any significant resistance level. We recommend working with pivot and VWAP levels. And so if you align your stop loss with those, you will significantly be able to improve the probability of your trade entry, because obviously you will have much better support or resistance for your position. All right, so for long entries, it's the inverse. We are looking for a high to be taken out by the price action. So the high of the setup bar needs to be taken out by this bar here. And then once the signal is triggered, the stop loss is set below the low of the setup bar. And you might also want to align this with significant support from pivot and VWAP. All right, so that's it for the PowerPoint. I think now I'll do some freestyle here on the chart. So what we have here is a 5-minute chart again from the crude oil contract. And what I've done here, you see this is a R0 and a R2, and this is created from this is in order to differentiate between 2 types of price action signals. So what we have here in the indicator dialog box is a option selected show composite reversal bars. So if I turn this off, you will see the R2 disappear. So in effect, what this filter does is to allow us to create reversal signals on 2 bars. So I'll turn this back on. And what this does is really neat. It combines the price action of 2 bars. And we have here when you combine these 2 bars, this is the type of candle that you would see in a 10-minute chart. And we have, you see here, a higher high or an identical high, and then a pretty clear down close here. So this is, of course, here plotting at range, at the upper range here. And we can choose to work also only with outside the range, or we can do mid-range, or we can turn this off completely. So if we say also outside range, we will have an additional signal here. So this is outside the range. We have an additional signal plotting here. And if we set this to none, then we will see a lot more of reversal patterns because they're not filtered out by the mid-range and the range. Well, we didn't have the mid-range activated here, but we can have a look at that as well. So if we choose to take only reversals at the mid-range, then we will identify this one here, mid-range. Now we only see this one. All right, there was one other thing I wanted to show here, I think. Yeah, the trigger period is down here, so that refers to how soon the high here needs to be taken out. Again, we see it here taken out immediately on the next bar. If we take this back into none, then we can demonstrate that better. Have more signals here. So this is taken out immediately. This one needs to wait for a couple of signals, a couple of bars. So if we set this to a trigger period of 2, for example, this disappears because it was not taken out within 2 bars. So that setup was invalidated. So that's a very powerful filter to validate the signals. How long do you want to sit around and wait for the price rejection to be validated? Otherwise, we also have the auction range bar period here. I've currently set this to 60. You can also set it to 30 for a 5-minute chart. For a 15-minute chart, I would probably use something higher, a 120 bar period or 240, something like that. I'm going to turn this back on, put range or mid-range. And here we see a beautiful down reversal here, a reversal plotting at the midline here, a up reversal that doesn't quite make it there. And these ones also go against the trend. So there's a lot of settings in here that you can play around with. I have the range and the volume filters added here. I can also activate the trend filter. Then I get rid of these reversals that go against the trend. And see if there was something else I wanted to show here. Yeah, this is the shadow size for spike bars. So we have set this to 45 for default. This is referencing the 10 previous bars. And for reversal bars, they're at 60%. So I think that is it for what I wanted to show you guys here today. I'm gonna wrap this little tutorial up. And yeah, if you have any questions about this, I'd be happy to hear from you. You can get in touch with us over at the contact form at licittrader.com. You can also drop me a line at info@licittrader.com. And yeah, if you drop me a line below in the comment form here, tell me what you got out of this video. I'd greatly appreciate it. If you like the video and want to share it with some of your trading buddies, that's also much appreciated. Thanks for checking in here. I hope it's been of value to you, and I look forward to welcoming you as a Licit Trader soon if you're not already a Licit Trader. All right, take care and bye-bye.